Most investors are waiting for a headline to tell them when the system breaks. By the time that happens, the opportunity is already gone. In 2026, the global currency reset isn't coming loudly. It's happening quietly, and the early signals are hiding in plain sight. Imagine waking up one morning and realizing that the money you've been saving, investing, and relying on for years has started losing value at a pace you can barely comprehend. Stocks, bonds, even your retirement accounts, everything begins to feel uncertain. Most investors are completely blind to the early signals of what's about to hit, the kind of signals that could change the way you view money forever. Today, we're diving into the global currency reset, the silent, unstoppable force shaping the financial future in 2026, and the early warnings that most people completely miss. If you've ever wondered whether the financial system you trust is actually safe, this is going to be eye-opening. Make sure you stay with us until the end, because what I'm about to share could save you from mistakes that could cost tens of thousands of dollars. And don't forget to like and subscribe to The Wise Investors if you haven't already. Right now, the world is at a crossroads. Central banks, governments, and massive financial institutions are quietly shifting strategies that most mainstream media either ignores or oversimplifies. We're not talking about small tweaks. These are structural changes that will redefine currencies, interest rates, and the way capital moves across borders. Think about the US dollar, historically the cornerstone of global trade. Its dominance is being challenged more than ever before. Emerging market currencies, digital currencies backed by governments, and even private sector alternatives are quietly gaining traction. If you think this is just a minor adjustment, think again. This is about the very foundation of wealth, savings, and purchasing power. You might be asking yourself, how do we even spot these early signals? The first warning sign is the unusual behavior of major central banks. In the past 2 years, we've seen aggressive changes in monetary policy that appear disconnected from traditional economic indicators. Inflation targeting has become unpredictable, interest rate adjustments are happening in ways that defy logic, and gold and silver reserves are being moved, hoarded, or disclosed in ways that only insiders truly understand. Most retail investors are completely unaware, and this gap in understanding is exactly what makes this opportunity and risk so critical. Another signal comes from digital currency initiatives. Countries like China, Brazil, and even the European Union are pushing forward with central bank digital currencies in ways that don't just replace cash. They could bypass the traditional banking system entirely. What this means for everyday investors is huge. Traditional savings accounts, bonds, and even retirement funds could face restrictions, digital tracking, and even unexpected devaluations if you're not prepared. These changes aren't coming years from now. They are happening right now, and the early adopters of knowledge will always have an advantage. At The Wise Investors, we've been monitoring these shifts closely. One of the most under-discussed signals is the movement in commodity markets, especially gold, silver, and oil. While the mainstream focuses on stock indices and headline news, the real story is often in these fundamental assets. Rising gold purchases by central banks, subtle manipulations in silver pricing, and strategic reserves of oil tell a story of preparation. Someone somewhere is betting that currencies, as we know them today, are about to face a massive recalibration. And while the public panics when headlines appear, those who understand the early signals position themselves ahead of the curve. Now, let's talk about government debt and deficits, another silent indicator. Countries are accumulating debt at rates that are historically unsustainable, yet interest payments remain manageable due to low rates or creative financial engineering. While this might feel safe, what it really signals is a system that is stretched to the breaking point. A sudden pivot or the implementation of a new global currency standard could make previously safe investments lose value almost overnight. If you've relied on traditional strategies, you might find yourself unprepared. It's also crucial to watch geopolitical shifts. Trade deals, alliances, and conflicts might seem distant, but they are directly tied to currency strength and financial stability. For example, if major trading blocs push forward with agreements denominated in a currency other than the US dollar, It has a ripple effect that reaches every investor, saver, and retiree. Early recognition of these patterns gives you a chance to adjust portfolios, hedge risks, and even benefit from market realignment rather than suffer from it. For individual investors, the question becomes, what should you do right now? First, awareness is everything. Understanding which indicators truly matter and not getting distracted by media noise can be the difference between thriving and struggling. Diversification is no longer just about stocks and bonds. It's about cross-asset hedges, precious metals, and understanding which currencies might retain value in a reset. Think of it like life insurance. You hope you never need it, but when the system shifts, you'll be glad you have it. Another practical step is monitoring liquidity and leverage in the system. Banks, investment funds, and major institutions use leverage in ways that most people can't even imagine. When liquidity is squeezed, the first casualties aren't always headline stocks. They're the everyday assets held by millions of investors who didn't see the warning signs. This is why early signals, like subtle policy shifts, reserve changes, and even rumors in financial circles, are so important. You don't want to react after the system moves. You want to be prepared before it moves. It's also worth noting the psychology of investors during these shifts. Most people operate on habit and comfort, which makes them blind to changes until they're forced to act. Meanwhile, those paying attention to early signals act strategically. The difference between a panicked investor and a prepared one can be tens of thousands of dollars, or more, over the course of a currency reset. By now, you're probably realizing that this isn't a story about panic. It's about positioning. It's about understanding the underlying currents before the waves hit. At the Wise Investors, we believe that knowledge isn't just power, it's protection. And the more you understand these early signs, the better your chance to not just survive, but actually benefit from the transition. If you found this breakdown valuable, hit the like button and subscribe to the Wise Investors. We cover insights like these every week to help you stay ahead. And remember, share this with a friend or family member who might be relying on outdated strategies. They deserve the chance to prepare too. As we wrap up, the key takeaway is simple. The global currency reset isn't a distant possibility. It's unfolding right now, silently, in the background. Those who see the early signals and take informed action will have the upper hand. Those who don't may be caught off guard. Monitor central bank activity, follow commodity trends, understand debt levels, and pay attention to emerging digital currency initiatives. Awareness is the ultimate edge. Finally, don't just watch, engage. Comment below with your thoughts. Which signals do you think matter most in 2026? Are you preparing your portfolio differently? Let's get the conversation started so everyone can learn from each other. And if this video helped you see the bigger picture, share it with your network. Helping others is how we all grow stronger. The future of money is changing, and those who act now, thoughtfully and strategically, will navigate it successfully. Stay informed, stay alert, and as always, stay invested wisely with the Wise Investors.